As of the current trading session on Tuesday, January 27, 2026, Redwire Corp is trading at exactly $14 USD, representing a massive intraday surge of $3.06 or 27.91% for the day. This price action is not just a random fluctuation in the space sector. It is a direct response to a massive catalyst that has caught the broader market off guard. While many traders were busy looking at the latest swings in NVIDIA stock or tracking the daily volatility of Tesla stock, Redwire has quietly secured a position that moves it from a speculative space play into a serious contender in the national defense infrastructure. The immediate insight here is that while the public often views space companies through the lens of exploration or satellite launches, the actual value in 2026 is increasingly being found in homeland defense and missile shield technology. Redwire was just selected for the Missile Defense Agency's SHIELD contract, a program with a ceiling of $151 billion. This is an astronomical figure for a company that was recently trading in the single digits, and it fundamentally changes the risk-reward profile for anyone using an individual brokerage to build a position in the aerospace sector. The general expectation for Redwire over the last year was that it would continue to be a high-beta, high-risk satellite component manufacturer struggling with the capital-intensive nature of the industry. The reality we are seeing today is far more complex and significantly more bullish for those who understand the shift in government procurement. This $151 billion IDIQ contract, which stands for indefinite-delivery and indefinite-quantity, means that Redwire is now a vetted partner for the Scalable Homeland Innovative Enterprise Layered Defense Initiative. This is a critical component of what many are calling the Golden Dome defense strategy. While most retail investors on Robinhood or those managing their own accounts through SoFi Invest might see a massive percentage gain and think they missed the boat, the deeper reality is that Redwire is just now entering the inner circle of the military-industrial complex. This isn't about just selling a few solar arrays anymore. It is about providing the maneuverable spacecraft platforms and advanced sensors that will underpin the next 20 years of national security. When you look at the trading volume today, it is clear that institutional eyes have returned to this ticker. We are seeing volume that is many times the daily average, suggesting that big players are reevaluating their models. Earlier this month, there was some concern when entities associated with AE Industrial Partners sold a significant chunk of shares near the $10 mark. At the time, that looked like a signal that the top was in. However, the current price movement suggests that those sales were likely strategic rebalancings rather than a loss of faith in the underlying business. If you are using Interactive Brokers Trading or a Fidelity trading platform to monitor these flows, you will notice that the bid-ask spreads have stayed remarkably tight even with this level of volatility. This indicates a level of liquidity and market depth that Redwire has rarely seen in its history. It is a far cry from the days when this was a thinly traded de-SPAC looking for a purpose. For those of you focused on self-investing or using investing sites like SoFi or Robinhood, it is important to understand why this specific contract matters so much more than a typical satellite deal. The SHIELD contract is designed for speed and agility, allowing the warfighter to access innovative solutions without the decade-long wait times associated with legacy defense programs. Redwire's reorganization earlier this year into two clear segments, space and defense technology, was a calculated move to prepare for this exact moment. By sunsetting the Edge Autonomy brand and bringing their uncrewed aerial systems and advanced sensors under one unified banner, they have made themselves a much easier target for massive government awards. This is a business model built on being the essential picks and shovels provider for both the commercial space economy and the modern battlefield. While many people are still putting their money into Schwab Intelligent Portfolios or General Fidelity ETFs to capture broad market growth, the real alpha is being generated by spotting these structural shifts in specialized industries. Comment below how many shares of Redwire you currently hold, or if you think the recent surge is just the beginning of a larger defense-led rally. It is always interesting to see how the community is positioning themselves, especially with the high volatility we are seeing across the board. Looking back at the third quarter 2025 results, the company was already showing signs of operational maturity. They reported revenue of over $100 million for the quarter, beating expectations on several fronts, despite the net losses that are common in this growth stage. The upcoming earnings report in March 2026 is now the most anticipated event in the company's recent history. Investors will be looking for specific guidance on how the SHIELD contract will translate into actual task orders. It is important to remember that a contract ceiling is not a guarantee of revenue, but it is a license to hunt in a very lucrative forest. This is the tension between expectation and reality that keeps the market moving. The expectation is that $151 billion will flow into the company. The reality is that they still have to win individual competitive bids within that framework. However, being one of the few selected vendors gives them a massive competitive moat that they didn't have 24 hours ago. The broader macroeconomic environment is providing a tailwind that many are ignoring. With rumors of a SpaceX IPO later in 2026, the entire space sector is being re-rated. When a titan like SpaceX finally hits the public markets with a potential trillion-dollar valuation, it makes every other company in the sector look incredibly cheap by comparison. This is why we are seeing sympathetic moves in other names like Rocket Lab or Intuitive Machines. But Redwire has the unique advantage of having a foot firmly planted in the defense world. If you are managing your retirement through Fidelity IRAs or using Fidelity Wealth Management Services, you might be seeing more aerospace and defense weightings in your portfolio lately for this very reason. The shift from pure commercial experimentation to essential national infrastructure is the defining trend of 2026. If we look at the technicals of the move today, breaking past the $13 resistance level was a major signal for momentum traders. For those using the Robinhood app or Robinhood Investments, the visual of a 27% green day is hard to ignore, but the smart investor looks at the order book. On the Interactive Brokers platform, we see a significant amount of institutional support at the $12.50 level, which should now act as a floor for any near-term pullbacks. The high volatility of this stock, with a beta often exceeding 3.0, means that it's not for the faint of heart, but for those who are comfortable with active investing through a SoFi active investing account or a Fidelity brokerage. The rewards for timing these contract-driven cycles are substantial. It's the kind of move that can define a yearly performance for a retail account. Redwire's history is one of consolidation and integration. They didn't start as one giant company. They were formed by buying up several niche players with deep heritage in spaceflight. This gave them a massive catalog of proven tech, from docking systems used in European space capsules to solar arrays that power the most advanced satellites in orbit. The problem was that the market didn't know how to value a collection of parts. Today's reorganization and the MDA contract award finally gives that collection a unified mission. They are no longer just a vendor, they are a prime-level partner for national security. This is a distinction that the market is finally starting to substantiate with a higher valuation multiple. When you compare Redwire to larger defense primes, it still has a lot of room to run if it can capture even a fraction of the total addressable market in missile defense. In terms of risks, the primary concern remains the company's path to profitability. They are still burning through cash as they scale their manufacturing facilities, such as the new plant in Michigan designed for fuel cell production. High interest rates have made it more expensive for small-cap companies to fund their growth, which is why seeing major contract wins is so essential. It validates the business model without the need for immediate secondary offerings that would dilute current shareholders. If you are doing online investing or looking for investment help, always keep an eye on the cash flow statements. Redwire has managed its balance sheet well so far, but the pressure to deliver on these new contracts will be immense. The execution risk here is real. They have to move from a small-scale innovator to a high-volume defense manufacturer almost overnight.
As we look toward the final months of 2026, the catalysts are stacking up. We have the March earnings call, potential new task orders from the SHIELD program, and the continued hype around the Golden Dome initiative. Each of these events will be a test of whether the reality of Redwire's performance can keep up with the market's high expectations. For those who prefer a more automated approach, like using a SoFi robo-advisor or Schwab Intelligent Portfolios, you might find that your exposure to these trends is more limited. However, for the self-directed investor using a Robinhood trading platform or Fidelity mobile app, the ability to pivot into these high-growth sectors is what makes online investing so powerful. To summarize the situation, Redwire is currently the standout performer in the aerospace and defense sector today. The jump to $14 is a clear signal that the market is beginning to price in a future where Redwire is a key player in global security. We have moved past the speculative phase of space travel and into the hard reality of